Welcome back to Investing Talk podcast. Today, we're taking a compelling look into a company that's been navigating some truly interesting shifts in the automotive world, Mobileye Global. You've likely heard their name if you're tracking the progress of self-driving cars or maybe those advanced safety features in modern vehicles. We've gathered a wealth of recent reports and analyses, and our mission, well, it's really to pull out the most important nuggets for you. Think of this as your shortcut to sort of getting a handle on a complex, rapidly evolving sector. The real question isn't just, are they growing, but can they translate that growth into sustainable leadership and profitability, especially in this cutthroat world of autonomous vehicles. We'll unpack their recent rebound, their fierce competitors, and those high-stakes investments that will determine if they truly steer into a profitable future.
And what's really interesting here is that Mobileye's story, it isn't just about the flashy headlines, is it? It reflects the broader challenges and, frankly, incredible opportunities within the autonomous vehicle space itself. We'll be looking at what's driving its recent performance, its position against some, well, pretty formidable competitors, and what the road ahead might look like, all through the lens of those key strategic choices they're making.
Okay, and before we really get into all of that, if you find value in our discussions, please do consider subscribing, maybe liking and commenting on this particular analysis. And if you're feeling extra generous, you can even buy us a coffee. It really helps support our work. Right then, let's unpack this. Our data highlights a significant shift in Mobileye's recent financial performance. They've certainly navigated a challenging period, seems like, but now they're reporting strong top-line growth. What are the key figures driving this rebound, and what's the immediate financial takeaway for us?
Well, the most striking detail, I think, from the latest figures is their Q1 2025 revenue. It surged to $438 million. That's an incredible 83% increase year over year.
83%.
Yeah. And if we connect this to the bigger picture, this rebound is really significant, especially considering the previous year's Q1 that was impacted by inventory drawdowns at their Tier 1 customers.
The suppliers.
Right, the major automotive suppliers who build components for the car manufacturers, so that context matters. They also saw that decline, remember, 23% in Q4 2024.
Okay.
So the trailing 12 months revenue now stands at approximately $1.65 billion, with projections aiming for maybe $2 billion next year.
An 83% jump sounds, well, certainly impressive. But as we know, top-line growth doesn't always tell the whole story, does it? Especially in a market this volatile. You hinted at a challenging period earlier. What's the financial nuance here? Is this rapid sales growth translating into a healthier bottom line, or are there other critical indicators we should be watching?
That raises a really important point, and it's a critical nuance indeed. Despite that strong revenue recovery, Mobileye reported a net loss of $102 million in Q1 2025.
Oof.
Their earnings per share remain negative, which is, well, it's been a consistent trend. And this profitability challenge isn't simply a spending issue, it's really a strategic necessity in this high-stakes race. Mobileye is pouring $275 million into research and development. Just in Q1 alone, that's a massive bet.
$275 million just on R&D.
Right. And this isn't just about developing new features. It's about a company trying to sort of front load the costs of dominating what could be a disruptive winner-take-most market. The insight here, I think, is that you're watching a company sacrificing short-term profit for the chance at long-term, perhaps exponential market leadership. It's a common playbook in emerging tech, but risky.
So this heavy R&D investment is clearly crucial for their future. But if they're still in a net loss position, how does that stack up against others in the industry? And what about other key financial indicators like free cash flow or debt, things that give us a fuller picture beyond just earnings?
Good question. Given the negative earnings, their PE ratio, that's the price to earnings ratio, the common metric showing how much investors pay for each dollar of earnings, well, it isn't meaningful right now.
Right, no E.
Pretty much. Many profitable peers in automotive technology, they trade at forward PE ratios between, say, 25 and 40. So that places Mobileye at a disadvantage in terms of traditional valuation.
Okay.
And similarly, return on equity is also negative because of those losses. Now, while specific free cash flow figures aren't explicitly detailed, it's likely negative or certainly under pressure, given the net losses and those high R&D expenditures.
Makes sense.
On the debt front, though, no red flags have been indicated in recent investor communications. That's a positive sign for their balance sheet stability, amidst these investments. And it's also worth noting their gross margin actually improved significantly in Q1 2025.
Oh, really?
Yeah, it reached 47% GAAP, that stands for Generally Accepted Accounting Principles, the standard way of reporting, and 69% adjusted.
Yeah, given adjusted. Got it.
And that's up from 23% and 62% adjusted in Q1 2024. So that margin improvement is a positive sign. It indicates efficiency gains on the products they are selling, even as R&D consumes cash.
That's a critical distinction, improving gross margins while still pouring money into R&D for the future. So all that spending is clearly aimed at staying ahead. But in an industry as intensely competitive as autonomous driving, does all that investment actually guarantee them an edge? Who exactly are they truly up against, and how do they really stand out?
Well, Mobileye's competitive advantage, historically, it comes from its strong portfolio of patents, things related to ADAS.
Advanced driver assistance systems.
Right, ADAS and autonomous driving. Specifically, their proprietary vision-based sensing technology and those deep relationships they've built with global automakers, those have been key. However, the landscape is rapidly intensifying, really heating up. They are up against formidable players like NVIDIA's Drive platform, Qualcomm's Snapdragon Ride, Aptiv's partnership with Hyundai Motional, and even Tesla's FSD efforts, their full self-driving push.
Right, big names, heavy hitters.
Absolutely. So when we look at operating income trends versus these peers, Mobileye is currently best described as maybe a challenger rather than an undisputed leader. Their battle isn't just about technological superiority anymore, but about securing those design wins and actually scaling production.
That makes a lot of sense about the crucial role of innovation and partnerships in this space. But Mobileye isn't the only one vying for these deals, are they? What makes their partnerships, like that recent one with Volkswagen, genuinely transformative? Are they truly moving the needle in such a capital-intensive industry, or maybe just keeping pace?
That VW deal is significant. The strategic alliance is with Volkswagen Group and also Valeo to develop Level 2 plus driver assistance systems.
Level 2 plus, so that's more than basic cruise control.
Correct. Level 2 plus means it goes beyond basic cruise control or lane keeping. It offers hands-on or even hands-off support in certain conditions. It's a significant step toward full autonomy, but still requires driver supervision. So this isn't just another new contract, it's seen as a crucial partnership. It can help mitigate regional risks, like tariffs, for instance, and it provides access to large-scale deployment opportunities across Europe's massive automotive sector. It's about establishing a foundational presence, locking in market share.
For scale and risk mitigation.
Exactly. And other opportunities include expanding into mobility as a service markets that offers new revenue streams beyond just the traditional OEM supply contracts. And they are certainly focused on continued product innovation with lines like their IQ6 Lite chip. That's apparently seen notable momentum. They're also active at industry events like the upcoming CES show. We might see further product announcements there, potentially opening up even more avenues for growth.
Okay, so a lot happening in the strategic front. With all these developments and the ongoing investments we talked about, what's the market's overall feeling, the sentiment towards Mobileye right now? Is the financial community generally positive, or are there still lingering concerns that keep investors, cautious?
Well, recent market sentiment has largely turned positive, especially following that Q1 earnings release and the significant Volkswagen partnership announcement.
Okay.
Financial news outlets, they highlighted the stock surge. And analyst commentary points toward optimism regarding future earnings potential. Even social media discussions, they seem to reflect a cautious optimism. You see users noting the big revenue jump, but still waiting for consistent profits.
The profitability question again.
Always. Caution persists around profitability because of the negative GAAP earnings per share, as we discussed. There was also some institutional selling activity noted. Birch Hill Investment Advisors sold over 102,000 shares around mid-June. Things like that may contribute to some short-term volatility as the market digests these various signals.
Right.
The narrative is certainly one of a company with immense potential, but also one that really needs to prove its long-term financial viability.
So what does this all mean for Mobileye Global then? It truly feels like a company navigating a pivotal moment, doesn't it? Balancing significant growth with equally significant investment in a highly competitive arena.
Precisely. I think that sums it up well. Mobileye has demonstrated incredible resilience, hasn't it? Rebounding strongly from recent setbacks, posting that exceptional top-line growth, and securing high-profile partnerships like the VW one that position it well for the future. This suggests the upside potential could outweigh near-term risks if execution continues along this trajectory. That's the keyword if. However, as we noted, the company currently trades without meaningful valuation multiples until those earnings improve.
Right. Hard to value traditionally.
So investors will need to monitor upcoming quarters very closely, looking for margin stabilization and a clearer path to profitability before, perhaps, fully reassessing its risk versus reward. It's really a testament to the fact that even with groundbreaking technology, the financial journey can be a very demanding one.
A complex picture indeed. It's clear that while the road to fully autonomous vehicles is, well, long and winding, companies like Mobileye are absolutely laying the essential groundwork, one innovative chip at a time. That's a truly thought-provoking question, isn't it? As these advanced systems become more ingrained in our daily lives, that balance between human control and machine capability will only get more complex. It's a journey we're all on, whether we realize it or not. And that leaves us with a provocative thought for you, our listener. As advanced driver assistance systems become standard, what truly defines a safe vehicle anymore? And how much human decision-making are we truly willing, or maybe should be willing, to hand over to the machines, regardless of how advanced their eyes are, especially when these systems are constantly evolving?
It's certainly something to consider as you encounter more and more tech in your daily drive. It really prompts us to think about that evolving relationship between us humans and increasingly intelligent machines.
Thank you for joining us on this deep dive, this analysis today. We hope you feel a little more well-informed about Mobileye Global and the fascinating world of autonomous driving technology. Until next time, keep that curiosity alive.